and starts dropping. As it's dropping right here, we are not doing anything. Coloring the RT high, aiming for the main, drawing liquidity right here. What we are playing is the 4-hour candle, is this 4-hour candle's development right here. Let's break down one of the most high probability strategies type of approaches, key factors that's been a huge part of how I approach the markets, of what I look for, and so on. So we are going to talk about that, and we are going to focus on all of the foundational stuff, everything that you actually need and nothing that you don't. So for this example, what we are using is the 5-minute time frame right here on the dollar CAD. So one key factor to mention right away is that we are trading on New York time zone, and one thing that you guys know I always pay attention to RT windows, middle of the long band kill zone and New York kill zone. So if the long band kill zone is from 2 a.m. to 5 a.m. right here, and the New York kill zone is from 7 to 10, the RT window reversal time when you're expecting for key reversals or strong structures to take place. On the London kill zone, it's from 3 a.m. to 4 a.m. right here, and for New York kill zone, it's from 8 a.m. to 9 a.m. So now one of the strongest ways, one of the strongest type of approaches that you can build and you can pay attention to is this layout of 4-hour, 15-minute, and 5-minute. You can juggle around from 5 minutes to 2 minutes or even 1 minute if you prefer that. For me personally, my whole execution window is from 1 minute to 5 minutes, whatever is telling the most clearest type of a story. Sometimes it's 1, sometimes it's 2, sometimes it's 5. I rarely use 3 or 4. So again, 80% of the time it's either 2 minutes or 5 minutes. So now what we have here on the left, notice that we have the full hour time frame. And one thing that I really do pay a lot of attention to is the 4-hour candle open that's aligning with the RT window. So you can see that this vertical line level mark where this 4-hour candle opens. So if we go to the left, this is the candle open. So we can mark the vertical line right here, make it a little bit more visible. So from here, you can see, again, if we go and open this candle from this to this is where this 4-hour candle closed, and this is this new candle opened. So if we now focus on that, what we had prior to that, we can very clearly see that price started pushing to the downside. It ran by high liquidity, took out the slow over here, retraced. If we measured this range right here, what we had was a tiny dealing range, meaning that price retraced into the premium right here and into the bearish order block. So in other words, what we are building for ourselves is a very short story right here, very short type of a vision to see if the 4-hour is making sense and what direction we are seeing. So obviously right here, then this candle open, we are seeing a bearish story. So that is perfect for us. This is when we can focus on lower time frames to see, firstly, if we have quick draws on liquidity, quick liquidity pools that we will be targeting. Just a very quick break from the video to remind you guys that we do run a very professionally made community where we offer one-on-one feedback, do multiple updates throughout the entire trading day, share our trades, explain all the most important details, why we are taking what we are taking, making full trade breakdowns, sharing lessons from technical to psychology. Here are just some of the achievements from our members. We truly focus on high probability professional trading, ignoring all the market noise, focusing on the best opportunities out there to maximize gains while controlling the downside. Even during rough, choppy periods in the markets, our number one priority is to come on top, managing the drawdown, focusing on the process that really takes care of the outcome, giving our members month after month positive returns. So that is enough about that, and we will see you inside. Now back to the video. So for that, what I usually use is 15-minute time frame. This one usually gives the clearest liquidity pools, the areas that I will want to pay attention to. So for this point, the first area that really pops out are these equal lows right here. And this is something that I usually pay attention to. Lower resistance structures, liquidity pools that clearly has a lot of accumulated liquidity around. So this area is just perfect. You can see that we have this very neat consolidation right here. What that means that we have a lot of liquidity resting below it. And this is what we will be targeting. This is our main key point area. In other words, meaning that we have draw on liquidity, type this draw on liquidity, and paste it right here on the 5-minute as well. So what we now have is a whole structure, is a whole point of view right here. So now what we will be doing is paying attention to the correlation between the 4-hour candle and the execution time frame. What we want to do is price when the new 4-hour candle opens is run liquidity and run the prior candle of liquidity, meaning that if we are looking for shorts, we want for price to run this candle's high right here, and we want that to take place during the earthy window. So notice what happens right here. If we make this full hour layout a little bit bigger, now notice that as this candle opens, it starts going right here. It starts building to the downside. Notice that it goes to the downside a little bit right here, and then starts building to the upside. Then eventually what it does, it runs prior candle buy side liquidity right here. So if you mark this and copy and paste it to the execution timeframes, you can see that this Asia range right here, that Asia range liquidity was the 4-hour candles buy side liquidity right here. So that's absolutely perfect. This is what we want to see. So we can literally just copy and paste it in the execution timeframes right here. So notice now that price ends up running prior candles buy side liquidity during the earthy window. So now we have a few key puzzle pieces fully aligning, starting with the full hour time frame. So we have this fully picked on right here. As we started seeing this whole vision, we saw that on the short-term perspective, what we are seeing is a bearish vision. That's exactly what we want. Now, second point, what we do to go to the 15-minute time frame and focus if we have clear draws and liquidity, clear ground areas where we have lots of low resistance liquidity pools, and that we do have. We have triple lows drawn liquidity at 1.37970. So 2 points are now ticked off. What we do from that point is identify prior candles liquidity and we mark it on the execution timeframes. Last thing that we want to see right here from the foundational parts is strong 30 structure. So for this structure to be strong, as price is approaching the buy side liquidity right here of this prior 4-hour candle right here, as it's approaching, we still don't know what is going to take place right here, meaning that we can have all of this, but let's see alum and kill zone don't play along, meaning that we will likely roll into the near kill zone and it's not clear if we will get anything there or not, meaning that price runs liquidity, leaves a strong high right here during the earthy window and gives a shift in delivery here on the execution timeframes. So you can easily see that what price does after leaving this low right here, it runs higher, takes out 4-hour candles high right here, runs this buy side liquidity and starts dropping. As it's dropping right here, we are not doing anything, and then it takes out the low right here. This is when we start paying attention to this whole structure, meaning that what we want is clear order flow from the execution timeframes to get us an entry. And then the shift in delivery happens. If we manage to place our stop loss above the RT high, this is where we are pretty much safe. This is our safe zone. So in this case, the closer price manages to pull back and give us an entry for us to get a better risk to reward, the better. So the thing that you guys already know I pay the most attention to are BPRs. And sometimes BPR is clear, and sometimes the BPR is best visible from 2-minute time frame, sometimes from 5-minute time frame. So what we are looking after the shift in delivery, we are looking for a BPR. After the market shift right here, time a strong RT high, we are looking for execution time frame BPR. Again, remember all of these puzzle pieces firstly must take place and must be on our side. 4-hour on our side, 15-minute drawn liquidity on our side, time of the day on our side, and execution time frames giving full development that we want to see. So once price gave this shift in delivery right here, what we have after that is notice price starts dropping to the downside, gives a shift in delivery right here, and then starts pulling back. So looking at what took place right here, what we do have is this very neat BPR right here. Notice bullish imbalance, we're lacking bearish imbalance. So price runs into it and starts pushing away. It also ran some buy side liquidity here as well, so that's great too. That's additional confidence factor. So in other words, you can enter around the middle of this pullback. I see everything is that in the premium right here from this high to this slope, this execution time from dealing range. You can start focusing on overlapping PDRs. I personally like BPRs the most. So let's say we took our entry right on the BPR right here with our stop loss covering the RT high and with our target obviously aiming for this sell side liquidity for the main draw. So this would be our initial trade, initial position right here that played out to absolute perfection. Now let's say you missed this entry right here. What you could easily do right here is follow price, and after we got this strong structure right here, as again the trend buy side liquidity into bearish PDRs, so what we have is a strong long on hill zone structure right here. Notice that price left another BPR. This bullish imbalance filled with bearish imbalance, so this could be your second entry right here. As price retraces into it with the stop loss, again you can go risky coloring this high, but if you want to be fully careful, simply minimizing all risks of getting spiked out before the entry goes, then of course you can literally just cover the RT high and aim for the main low right here. Obviously your risk to reward with this low type of an entry will be much lower, but obviously that's part of trading, and if you miss is this first entry, this is your second entry, and it's literally up to you whether you want to cover this high or go for the earthy window right here. What we get here during the near kill zone is a very tiny shakeout, and what I'm talking about, notice that price starts at building this liquidity, it runs the sell side liquidity, then it runs the buy side liquidity. It runs the buy side liquidity into this bearish fair value gap right here, and the high was formed again during the earthy window. So as it starts melting, obviously if you want to be a bit more aggressive, you can add a quick scaling right here. Again, that would be a pretty aggressive type of a position, but again, we got an earthy window, price starts melting, you can just jump into this type of a quick 1-to-1 or 1-to-1.2 type of position right here. But again, we are going into a bit high risk rounds right here. The main best type of opportunities are born during a long bug kill zone, during all of these conditions, when they have 4-hour direction, 4-hour candles aligning with the drawn liquidity and execution timeframes, ticking off all the boxes regarding the earthy window, strong P2 race, running buy side liquidity, even strong market shift and delivery, leaving BPR. This is the perfect ground for high probability trades. And what we are actually doing is trading the 4-hour candle. And what I'm talking about, if again we enter on this BPR in here, covering the earthy high, aiming for the main drawn liquidity right here, what we are playing is the 4-hour candle, is this 4-hour candle's development right here, getting entry on this 4-hour, seeing it run the buy side liquidity into 4-hour bearish P2 race. We have this bearish order block as mentioned, and leaves a high of the day, starts reversing, and with the second candle we fully complete this move right here. Sometimes it happens all in one 4-hour candle, meaning that when you get this 4-hour candle, it gives the entry right away and melts towards your target immediately, meaning that most of your trade will be fully completed inside of this one 4-hour candle. That doesn't always take place, obviously, because price would have to move really fast. So often it's a combination of two candles, but the most important one obviously is this one right here from 1 a.m. to 5 a.m. because this is the one that actually gives the earthy structure, the earthy strong development that we want to trade away from. So hope this was helpful. Hope you will manage to find a way to squeeze some of those key foundational parts into your trading, into your system. Obviously, firstly, fully test it, get used to it, run some numbers. Don't just blindly jump into this, because even though it sounds simple when you're talking about clear examples like that, trading it live, it will require some experience, insights, some gut feeling as a trader, obviously, as well as all the data collected behind it, where you literally just train your eye to see these type of high probability setups, to fully know when it's a red flag, when there's something questionable going on around this setup, and when it literally ticks all of the boxes like this one did right here. So that is all. Let's wrap this video, and as always, we will talk soon. Take care.